Let's walk through this step by step. Bitcoin's been putting in some solid work this week, with those spot ETF inflows hitting nearly 1.7 billion over 5 days. That's the highest we've seen in 4 months, and it's definitely been the main driver pushing us above $80,000. But here's where it gets interesting. We're now sitting right at a critical resistance zone that's going to determine where we go next. Let me break down the key levels for you. We've got major resistance sitting between $82,800 and $83,300. That zone includes the 200-day simple moving average, so it's no joke. For the bulls to really take control, we need a clean daily close above $83,000. That's the line in the sand. Below current price, your immediate support is around $80,000. Then we've got deeper liquidity zones at $78,200 and $79,100. The crucial floor sits at $74,937. If we do break through this resistance convincingly, we're looking at targets of $84,000, then $85,200, and potentially up to $88,000 or even $92,000. The ultimate overhead supply zone is way up at $107,000 to $109,000. Now let's talk volume and positioning, because this is where things get a bit messy. Yeah, the bulls are in control on the higher timeframes, and smart money wallets holding 10 to 10,000 Bitcoin have been accumulating. But here's the catch. Trading volume is fading and open interest is staying flat. That's not what you want to see in a healthy rally. Some are calling this a speculative trap because the network activity is weak and we're seeing negative spot demand. The liquidation map is telling a pretty concerning story too. We've got about $15 billion in long positions sitting below current price versus only $3 billion in shorts above. That's a 5-to-1 imbalance, which means there's a massive liquidity magnet below us. If we get a modest drop, it could cascade into wider liquidations and really take out those stops. Here's what I'm watching. First, how we react at this 82,800 to 83,300 resistance. A clean break and hold above 83,000 on the daily would be bullish confirmation. Second, keep an eye on those ETF flows and open interest. We need continued inflows and rising OI to show genuine demand. A rejection here with declining volume could signal a deeper pullback is coming. For trade ideas, if you're looking at a breakout long, you'd want entry above 83,300 on a confirmed daily close, targeting 88,000 with a stop at 82,000. For a reversal short, you'd wait for clear rejection from that resistance zone, targeting 78,000 with a stop at 84,000. Just remember, this is a personal take, not financial advice. The market structure right now looks like a bear flag retesting its top, and with all that long liquidity below us, we could easily see a sweep lower if bulls can't maintain momentum. Don't get chopped up here. Wait for a decisive move either way. That sums it up.